Good evening, I'm Giuseppe Basile. I'm the innocent trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. Good evening, today is Wednesday, September the 17th, 2014. It's 11 p.m. time in Toronto, and in this video I'm going to review for you all the 12 markets I follow. This is a midweek review which I typically post on my blog, and in the near future I will start sending this weekly update only to my newsletter subscribers. So if you want to receive this video, keep receiving this video, keep watching this video, the only thing you have to do is just go to my website and subscribe my newsletter. It takes only a few seconds. I hate spammers as much as you do. You are always in control, and if you want to unsubscribe the newsletter, you can do this with a touch of a button. So let's start from the euro dollar here. Yesterday I've been invited for an interview at the live analysis room with Dale Pinkert, and in that occasion I provided an important area of resistance starting at 129.83. This is the area you see here, starting 129.83 with a stop above 130.13.14. I've been provided this area before it was tested yesterday. It was tested again in the morning today. This is the Thursday bar which started forming here, and as you can see, the market was pushed down uh, in correspondence to this area of resistance. So this area is real. It's this participation of program trading there, as we would expect. And now price is back on top of this larger level of support. This level is traced from lows in 2012, June 2012, to highs in beginning of February 2013 here. I explained in the interview yesterday with Dale why this area is relevant, and we could actually get a bounce from here. So um, when we look at the daily time frame, I'm looking for, as I mentioned yesterday, as well in the interview, I'm looking for price above 130. 13 14 here for a confirmation on the daily time frame. However, I think there is a unique opportunity here on the 15 minutes chart, and let me show that to you. I want to show you the current sequence on this time frame, and remember that price here is on top of that 128.80 area. So there is a possibility for this market to react, and to do that it will need to break the current sequence of measure moves. So we have this trace with market that came to retrace into the old way back here, 129.45, and now hit the first and second target. And as you can see, after the second target was hit, there was some profit taking happening here. So what's happening at the moment to this market at the moment is just trading the next extension short, as you can see here, and 128. Let me remove the previous move here. The 128.74 was never broken on the upside. If that happens, that could be an indication for an entry in this market. So mind though that this is a risky entry, and the reason for that is there is this setup which still has target well into this area of support. This would be the 127 128 level. Now price can actually be pushed there, and then we could see a reaction, or simply the next measure move short trading, or we could actually price could react from here and then continue higher and eventually break the 130 13 or 14. The reason why it's convenient, could be convenient, getting into this level, is that if the market continues higher and breaks that 130 18 14 15 level, you could be already in a trade here. Of course, the stop goes below lows. Moving to the SP 500, you will remember that I've indicated this 1942 level. You will remember that also that I timed this 1883. So price went there and eventually started a reaction higher. So at the moment, this price has a first target at 2023. This is the first target of this larger area of support here, and in the previous weeks I've indicated this 1942 level, which could be a potential level of support. Actually, I didn't indicate in the previous week, but I indicated this on Sunday when I resumed my analysis. The market never got that, just continued higher. So this market actually, so I'm going to review for now this level. This might come into place again to play again, but we need to consider the 2022. That's the level where this market is headed at the moment. That's the first target of this measure move. Moving to the dollar index, I won't say a lot here. The only thing that I will observe is that this 84.07 level of splits on the downside, and this could be a good indication for a potential retracement here in this market. Now, um, this is a busted setup. The market could actually come down and actually continue lower, and I've indicated here a 82 83 area. That's where there is a possibility for this market to retrace. I don't look at this market, I look at the euro dollar, because there is more volume there and there is a bigger opportunity and probability to get much better signals in that market. So no need to look at this market a lot, but this, it might be an hint that the scenario that I've showed you on the euro dollar on the 15 minutes would actually start working. The gold at the moment seems to be in a very similar situation as the euro. There is an extension short from lows to lows, and you can see that price actually went into that area and continue lower. Again, like for the euro, this first target at 12.13 has not been hit. So actually the market could continue and hit that level, actually even continue lower. We still don't know that because this is an extension short, so there is a potential for this market to continue lower. So that's what I'm going to look at. There are different reasons. Now we could make the case that we are on top of support on the weekly time frame for this market too. So exactly the same situation, is exactly similar situation as for the euro, with the only difference that for the euro that level is a level that can be clearly seen on the daily time frame as well as the weekly time frame. In this case, this is a large weekly level that is traced by taking consideration the lows in 2001 to highs in 2011. So on the daily time frame, so we could actually get for this market a reaction higher too, that will break the sequence of measure, move higher, and then potentially bring price now at a lower level. That would be the highs to lows here, and that would be the level where the reaction could actually bring price. That's the 1282 in case this market starts moving higher. Moving to the Japanese majors, US dollar versus Japanese yen is the first one. This market is continuing higher in extensions, and I can now also remove this daily time frame, move on the daily time frame, because as you can see, the market touched the first target 108.39 from this area in in 90 the 94 area, and that's what I've actually mentioned at the beginning of August here. So exactly here that we will get to 108.39 and to 115 area, which is the second target of this large measure move here. So that's where we can get in this market. If you want to prove, just go to fxtrade.com, look for Japanese economy, search for Japanese economy, and look at the article I've written. I've been published. It has been published at the beginning of August. You will see that I've indicated this target and the next target above 115. So at the moment, there is really not a lot we can do in this market. If you follow my indications, you would have entered here and again with the half of a position, and then again here with another half of the position, and you'll be enjoying 600 pips at the moment, and this has the potential to do another 700 pips. So these are those trades that make your year. Actually, you can do 20-30% just on one trade like this. Of course, these trades to develop took a lot of time. Actually, it took the full year to develop 150, sorry, 100 1300 pips move here. But it's if you are patient and you keep using mechanically my method and the fib stalking timing technique, which is a unique technique that allows you to procedurally test area of support and resistance, the same areas that I trace here. This task becomes much easier. You can remove a lot of emotions from trading, and actually, I actually designed the method to work in a way that the identification of the trading plan and the timing of the entry could be actually um, split in two separate processes, in two separate moments. So that's my contribution to trading, and that's what I teach also in my coaching program. Moving to the euro versus the Japanese yen here, you will remember that we had a very similar situation here, and this 136.80 area was tested once in February this year, and then again 2, 3, 4, and 5 times. And I've indicated that in this market we would be in the same situation as for the US dollar versus Japanese yen. Now, of course, the euro has been weaker in the last few months, but as you can see, the Japanese yen has been even weaker than the euro. And as soon as the euro will start a reaction higher, and that reaction will eventually come, this market should actually catch up with the US dollar versus Japanese yen, as I believe that the mm Japanese yen I mean, has the potential to be much weaker than the euro. If not because the Japanese financial ministry already started, and and the central bank already started QA2 basically in Japan. So, and this is going to continue through this year and probably next year. So again, timing this would have required to know this level, and this level was known to me back in when I saw this high in at the end of that last year. So, this level was known with more than 1 month in advance, as you can see. So, that's the power of using and being able to analyze and identify algorithms on price, and that's my edge. I call it the process of learning how to spot algorithmic trading footprints on price. These are the footprints. These the reactions at these levels are the footprints on price of the presence of program trading. So what I was saying before is that identifying and entering this trade requires the application of the fib stalking technique on top of these levels, and the fib stalking technique, it's a proprietary timing technique that allows to test this area of support and resistance. So here tested entry, eventually stopped out, but I couple always this entry with the money management, so that I exit half of it. So when, if and when the market comes back, we can exit break even. So you need to keep trying. You need patience. That's the way the market works. That's what the market requires, and eventually the market will actually reward you. The point is, now there is a technique that you can use in a very procedural way, and that's what I teach. Moving to the pound versus Japanese yen, same situation here. the market actually was able to put to retest this 169 60 to level. Sorry, not retest. This is the lows to highs and the previous highs here. So the market went to retest the level, as you can see, almost to the pip anyway, pushed well into that level, and then again applying the fib stalking technique on the sequence of measured move on the smaller time frame here could have helped you time this level on the 4-hour chart or on the 15-minute chart. So after that we saw a continuation higher, and of course after seeing these 5 bars, green bars, with the market moving, extending a lot, we have an indication that that is an extension. So there are different ways to find these extensions, and I also explain this in my coaching program. And as you can see here, there was a reaction at this 173.07, and price went into the first and second target. So if this market has to continue higher now, we are going to see a retracement again into the next measured move higher, and this is an extension again, and that will come when and if price gets into 175.65. If price never moves below 175.40, which is our stop, we should see a continuation higher into first and second target. Continuing the euro dollar versus the Canadian the euro versus the Canadian dollar here, with a nice sequence of measured move here, starting from these highs. And at the end of May, I made an analysis of this market as well. You can find that on my blog. It's actually um, a video that video interview I made for Dugascopy, and I called much lower levels. I called 138 here. The market went to 140.50. I think there is still a possibility for this market to get to that level, but let's look at the sequence of measure move. The first resistance came at 153. Price went into the first and second target, and then after that there was an extension from lows to lows, and price got into that level, and then again using the fib stalking technique you could time a fantastic trade here into first and second target again. And this is the next measure move in the sequence here, would be um, an extension short here, and as you can see, this extension short failed. It failed when price went above this 142.80, and that is a that's to me means that the whole sequence of measure move lower here is finished. Now it has completed before um, this area of support is tested, so it it's still risky, but this market could actually continue higher, and now as the potential as it is, the highest probability trade is a retracement all the way into the 148.11. It's a long way, almost 700 people, 700 pips here, but that's what this market is telling us. Of course, there is always a small probability that this market will continue lower, but that's fine. If that happens, I'm happy to see that as well, because then I would be able to time even a better long here, a higher probability and a stronger long here, which would be supported both by the by this level, by this support level, the 138.50, plus the application of VIP stalking technique. So at the moment, again, this market, we could apply the same considerations that applied to euro dollar and try to pick this market here. It's risky. Again, there's no support here like in the euro dollar. The support is actually lower, so be very careful in this market. If anyway, this 142 80, it's a very important violation, and eventually we will see this market correcting higher. Moving to the pound versus the US dollar, another major. This market actually, you will remember that those who follow me will remember that I mentioned that this market could correct all the way into 160 area. We almost got there. We got to 160.53. So congratulations to those who took the trade here. Now there was a nice sequence of measure move short here that could be traded, and you could have added to this position, and this was another 30%, 40% potential trade, which would make your your year actually. And the last extension, the last measure move I mentioned here was this 162.94, and we saw today that the high, the 163.52, was placed on the upside, and that's an important indication. It means that this sequence is completed. Now I would like to see this on top of an important area of support. So the fact that this that has happened here, it means that there is still the potential for this market to continue lower, and we don't know that. So if it continues higher, then we are going to wait for a retracement and then entering long. But we don't have to do that. There are always opportunities on 12 markets. There is always another market is offering a better setup. So for example, the setup in the euro at the moment, it's much safer than this setup, so that's what I would look at. Moving to the Australian dollar versus the US dollar, this market has actually violated the 018, 89, 81 level, a level that I gave you. Um, I repeated actually, I gave you since the beginning of July here, and on Sunday I also gave you this level. So this was, as you can see, on Tuesday yesterday, this level was tested. That was the next extension long, and we are seeing a reaction here at this first target. Again, how do you trade and take advantage of these opportunities? Using the fib stalking technique on top of below that level of resistance. So the next measure move, if we get a retracement higher, is going to be from same lows to low here. And now this is the next level we have to watch. If the market continues and gets to the level, that's again a level of resistance, and the market could get there and then just continue lower. We don't know that. If the market on the other side moves above 09124, 25, that's an indication that for now this market has completed its move lower and is going to retrace into a level of resistance, and that would be a very good entry short for this market. That would be the 092.23. Again, if that happens, there are three scenarios: continuation lower to the second target of the previous measure move I showed you at the beginning, could be a continuation higher into this 90, 89, and if that happens, we have to look at the fib stalking technique here at this area and see whether we get a reaction, or the market could just continue higher into 092.20. And that's again a great short here, a great short, because this market confirmed that longs are not able to keep this market higher on the daily time frame. Moving to the US dollar versus Canadian dollar, support on this market. Let me show you where we got support here at the end of August. I showed you and actually gave this setup as well. You will remember that I mentioned that we had a short, but we had to check what would happen when the market went to the all the way halfway back long. And as you can see here, the sequence of measurement failed and this market started higher. uh, and this could have provided alpha risk, unit of risk here into target, and actually also an opportunity to add. So with the fact that 110.28 was placed on the upside, that's an indication that the longs are back in control. And actually today we had longs after first target was hit. Actually we had long trading the next measure move in the sequence, and this is going to has the potential to bring price into 111.67. Someone asked me where I see the US dollar versus Canadian dollar going. There is a resistance which is very clear on the weekly time frame here for this market, has been respected so far at the beginning of March, sorry, at the end of March, around the mid end of March here, and that's the 112.50. So that level is going to act as resistance again, and according to the behavior and the fact that the larger sequence long has failed just below this level 112.50, there's a possibility for this market to act as a resistance, so see this area and level to act as a resistance again, and that's the highest probability scenario here. Finally, I want to close with the New Zealand dollar, and someone asked about this 081.20. A few people, by the way, not just one, and actually, as you can see, now this level has failed, and this failure is very important, and it's actually a scenario that is similar to the euro dollar. So the market will go and correct into the next, sorry, into the previous support area in absence of hitting a target. So I'm going to remove this level here. Now, this market might react as the US dollar continue higher before a continuation lower, and will be very important to identify that anchor. Sorry, that the anchor that will actually provide the next area of resistance. And this is going to be a great trade, and it could well be this 08644 the anchor, or could be a lower anchor like the 08406. We don't know that just yet, but uh, I will keep following this trade and this potential trade here, and as soon as the sequence of measurement move higher fails here, that could be a very good indication that this market is ready to continue lower. Now, if the resistance is going to come at this 08361, which is very probable, there is a possibility for this market to trade this extension and then trade in the first and second target. This would be a great trade that would bring price from 08361 to basically 77 11 here, which would be basically I would say 650 pips. Great trade, possibility to time this trade on a very small time frame. Great trade. So this is it for today. This video has been a little bit longer than usual. I want to remind to you again that I'm recruiting participants to my coaching program. There are still not a lot, like actually 2 3 spots left. I have a lot of people responding, and so if you're interested and you want to get you want to be considered for this coaching program, let me know. Just send me an email. I read and respond personally to all your emails. Just let me know. Drop me an email or drop a post on the blog, and just hit reply to this midweek update newsletter. Thank you very much for your attention. Have a great evening. Have a great trading day tomorrow and non-trading day as well. And I'll see you on my blog or in my newsletter. Thank you very much for your support and for keeping following me. Now I also want to remind you that I'm going to offer a free webinar next Tuesday on fxtrade.com. Is going to be very important, the fallacies of the technical analysis, and why by trading traditional technical analysis you will get suboptimal results, if results at all. A lot of people who trade traditional technical analysis and multiple signals lose money in the market. Actually, 95% of people do that, just that. Register now. There is a link in the newsletter, and I hope to see you there. Bye bye now, and have a great evening. Bye now.